Good morning, good afternoon, good evening. Welcome to this month's edition of AML Voices brought to you by AML RightSource. I'm Elliot Berman from AML RightSource, and I'll be the moderator today. We're glad you've joined us for today's session on strategic approaches to SAR filings. As financial regulations evolve and resources are stretched, AML professionals must adapt quickly to maintain compliance and mitigate risk. And today we'll explore the challenges of meeting regulatory expectations and filing useful SARs. We have an outstanding panel of experts, and I'm going to ask them to introduce themselves. Lee, and after Lee, then Dan, and then Steve.
Thank you. Hi, everybody. I'm Lee Riedel. I am a senior manager in the AML Complex Investigations Unit at PNC Bank.
And I'm Dan Stepano. I'm the head of the AML practice at Davis Polk. Before that, I spent many years in the federal government as a regulator in a variety of positions at the OCC.
Good afternoon, everybody. I'm Steve Gurdek. I manage the Northern Virginia Financial Initiative at the Washington-Baltimore HIDA. A lot of acronyms anyway, but the bottom line is I've kind of managed and part of the SAR review team in Northern Virginia, which we've kind of been a model for a number of years now.
Thanks, guys. Before we dive in, just a few quick housekeeping notes. Today's session is being recorded, and it'll be available on our website shortly after the session ends. And if you'd like to ask a question, please use the Q&A feature to submit it. We'll do our best to answer as many as possible. And with that, let's get started. So we've got a number of topics we're going to cover. The first one, kind of to set the overall stage, is SAR reform. In October of 2025, as I think everyone knows, FinCEN issued additions to its SAR FAQs. And these new FAQs are all the FAQs are part of the regulatory changes that Treasury's putting in, but these four in particular are. So, Dan, let's start with you. How do you see these changes impacting current compliance activities at FIs?
Okay. Well, I do think it's important to understand the context of these changes and why they're happening. I think that there's been widespread recognition for a long time that the SAR system and really the entirety of the BSA is in need of reform, that the way it's presently structured and applied is resulting in a lot of inefficiencies and, not something less than optimal effectiveness when it comes to the information that's being generated and provided to law enforcement. And shortly before the FAQs were issued, Undersecretary Hurley, who I understand is outgoing from the Treasury Department, there have been reports to that effect, gave a speech at an industry event in September. And he laid out a blueprint for BSA reform broadly, but there was particular focus on SARs, and it kind of laid the groundwork for these FAQs, which were issued just a few weeks after that. So they really, even though there's four of them, they really cover three main areas of structuring, continuing activity reviews, and no file decisions. And they don't break any new ground, but what I think they do is they reset the balance where it was always supposed to be with respect to these areas, And I think over time, certain examiner expectations kicked in and caused banks to do things somewhat defensively so that they didn't get in trouble. So going forward, what these FAQs say, with respect to structuring, the mere fact that you have a transaction or even transactions that are at or close to the $10,000 filing threshold for currency transaction reports does not necessarily mean that you have to file a SAR for structuring. If you have evidence, you have reason to believe that they were deliberately structured that way to evade filing requirements, then yes, you need to file. But it's not going to be a strict numbers game. You have to have something more than just transactions that are close to the threshold. The continuing activity reviews, basically, they're saying that if a bank wants to, it doesn't have to do them. But it leaves open the door for banks that want to continue to do them and gives them a little bit more time to file the SAR, moving from 120 days to 150. And then on the no-file decisions, it says that banks don't have to extensively document their no-file decision. So, all of this on the surface sounds really great to me. And I think it was very much well received by the financial services industry. But I do think there are some caveats, and two in particular. The one is that whether or not these have the desired effect, which is to reduce the unnecessary regulatory burden, really depends on how they're applied by bank examiners. Because if bank examiners continue to question, say, no filing decisions, then it's going to force banks back into the box that they were in, where they are going to need to extensively document. And there's also the second caveat is this. We've all seen pendulums swing, and pendulums swing in both directions. And these are FAQs. This isn't a rulemaking, it's not even really a formal guidance document. It's something that could be changed very quickly and very easily. And if the political winds shift and we have a different administration in a few years with different regulators, there could be some kind of a snapback on this. And if you're a financial institution, like let's say hypothetically, you decide that you're only going to minimally document a no-file decision, but 3 years from now, you're challenged on a SAR, a transaction where you didn't file a SAR, and you don't have any documentation of why you didn't file the SAR, that's going to put you in a tough spot. So, on balance, I think this is a good thing. I do think there is some skepticism here that's pretty healthy. And, among the banks that we advise, it's kind of a mixed bag. There are some that are saying, for example, like with continuing activity reviews, great, we're not going to do them anymore, right? Just not going to do them. But we also have a lot of banks that we advise where I think they're taking a more cautious approach and, are not making wholesale changes in these areas. So that's a little bit of a thumbnail, from what I see, from where I sit.
Lee, what do you think?
Yeah, I think your point at the end there about this balance of a cautious approach is an important one, because you don't know what this is going to look like a couple of years down the road. And there are some doors left open. I think the continuing activity report is an important one. The FAQs highlight that rather than simply filing a continuing activity SAR, you should rely on your alerting function and rely on the framework of review that you have set up and it identifying activity that would warrant a follow-up. That then puts the onus on that alerting function and on what banks have built to make sure that you are identifying activity that would warrant continued SARs. And so I think there's still room for regulators to still build the box, right, around what banks are going to be required to do. And we don't know what that looks like yet.
I think from my own experience, which is a little dated, but I don't think this has changed a lot, most banks in filing a continuous activity report were essentially saying what alerted originally that got us to reach a SAR filing decision continues to happen. And so, I found that change or that FAQ to be kind of interesting because and I'm going to go to Steve in a second with the kind of as this jumping off point. It seems to me that if a SAR triggers an investigation, then those continuing activity notifications become more valuable. Now, while I agree with you, Lee, the onus in one way is shifted to the banks and their alerting systems. The other thing is now, rather than getting a steady automatic flow, if you will, of information to the investigative process, the investigators have to take that extra step of going to the bank and saying, tell us this is still happening. So, Steve, kind of throw you a slightly curved version of the question.
Yeah, no, I mean, the age-old question is here. I just came off of our monthly SAR review team meeting here Tuesday. Very great turnout, a lot of different interest here, but the question comes to you is what's the value of the SAR? What makes the SAR valuable? And there's kind of two realms for it. When you're looking from a proactive side, from a SAR review team like mine, how do you grab somebody's attention? What about a SAR can grab when I'm sitting around reviewing with all the law enforcement agents there on Tuesday? What brings them forward? It's that I harken back to one of my favorite prosecutors who always talks about when we're talking about bringing in cases, if you don't understand if you can't present your case in a paragraph or less, you don't understand it. So it's kind of like you want it from a SAR, you're looking to something that grabs you from that SAR in that first initial part of it. Is it, make me care about that SAR? It catch me in the first paragraph. One of the review processes we use now, or always is probably going to be used, is the kind of keyword thing in there, making sure there's some keywords in there because a lot of places serve by keywords. But and then again, for like the proactive stuff, is there a easy point of contact to make this partnership work? Other SARs, I'll say they fall through the cracks. Other SARs will be there as an intelligence source within the system for reactive or part of other cases down the road. But generally, if you got the good one, like I know here in the Eastern District of Virginia, they even have a SAR hotline. If you've got a SAR that you really think needs to be something done with it, there's somebody to reach out to. But we'll talk later about the partnerships getting together. But that whole idea of, when you really have something to reach out, or is it more of a routine filing that, I just got to take note of this, but it's probably not going to get a lot of attention. It still is a valuable piece of intelligence.
And that really is our next question, which is, given these changes and just in generally as well, how do you describe a useful SAR? I think you just described one as one that really grabs you and gets your attention so that the investigative process either starts or at least the conversation about whether there should be one starts. Lee, from your perspective on the generating a SAR, how do you describe to folks what a useful SAR is in the sense of what we want to be sure we get into a SAR?
Yeah, I think there are certain details you want every SAR to have, but at the minimum, you want it to tell a story to law enforcement about what's going on and what you see at your bank. And I think the onus now is to really increase that story that you're telling, because you don't know that you're going to get to tell law enforcement that activity is continuing. And so now it is, what is the full scope of activity that you see at the bank? And, at the end of the day, we try to have those proactive relationships that Steve talked about. I think financial institutions try to build those relationships with law enforcement, but the primary way we are going to communicate with law enforcement is through a SAR filing. And so you just have to keep reiterating, this is your opportunity to signal to law enforcement something that's going on here.
And we had an interesting comment in the Q&A that, to the extent that the new recommendation from the FAQ sort of puts the onus on the transaction monitoring process, to the extent that the activity continues to alert, it almost seems like there may be an unspoken expectation to file a SAR every time you see that activity alerting, rather than just to 90 days or 150 days now out saying, yep, still happening. Or too early probably to really know what's happening in that space, but an interesting perspective.
Elliot, there's some irony here, right? Because the whole concept of continuing activity reviews and continuing activity SARs was supposed to be a burden reduction measure for banks, because in the absence of that guidance, if you look at the SAR rules, technically, every time you have a suspicious transaction, you should file a SAR. So if there is ongoing suspicious activity and the account remains open, banks could file tons of SARs theoretically, right? So this guidance that came out, I don't know, years ago, 15, 20 years ago, said, well, you don't have to do that. Do these reviews every 90 days. If the activity is continuing, then you file the continuing activity review SAR. But I think that's really the very point that the question is aimed at, which is that if you don't do that, is there going to be an expectation that you're filing SARs every time there's an alert and ongoing suspicious activity? It could almost have the opposite effect of what's intended.
Right. And going back in that same time period, focusing more on SARs than CTRs was about the fact that um, the number of CTRs had reached well into the millions per year, and the number of SARs being filed was in the hundreds of thousands. And so it was like this was really a way to identify the things that law enforcement would really want to know about. Now that I don't know, I don't remember last year's number, but it's a big number. It's not 10 million, but I want to say, is it Steve, was like 3, 4 million SARs last year?
I don't think I have the stats for you there, but I don't think there's much doubt that the volume would naturally increase, especially now, since, I mean, there was I understand that's almost a revolution in financial investigation that changed. I always link it to the COVID era because it seemed to be at the same time where we went from, inline banking to online banking almost overnight. And the intelligence we were getting was totally different. Kind of coming in from a different perspective than before. So it's almost natural that there'd be more of this because the systems would pick it up. And you can tell from some of the SARs now, especially with some of the peer-to-peer systems, there's some blatant, almost blatant, indications between emojis and conversations that something, not right's going on here and it probably should be looked into. So, I mean, I don't think that surprises me. And I think we talk later about the, uptick in fraud, and it's kind of like the natural progression is our ability to follow the money now has become, is exploded into the tech world now. And it's something that even law enforcement has to kind of catch up to deal with that. Oh my God, you've got this intelligence and you've got this down to small transactional data you never had before. And, what do you do about it?
Right. We just got a comment in the Q&A that regardless of what FinCEN publishes until we get clear, in all caps, clear direction from our examiners, my process remains intact. 90-day review continues and structuring SARs continue. And I think, Dan, that goes back to your point, from the very beginning that we have,
Yeah.
it really does come down in many cases, and not just these FAQs, but all changes to see how they actually are implemented in the examination process. And
Yeah, I mean, this group of regulators we have right now, I mean, they're in a hurry. They want to get a lot of things done, and it's a lot easier to issue a set of FAQs than it is to amend a rule. And so, we're not seeing much in the way of rulemakings, even though the AML Act, which, had provisions that required them to address SAR reform, been really not implemented at all, other than parts of the Corporate Transparency Act. So I think this is kind of the way they roll. They like to do things in this way, but the downside of it is it can get changed very quickly. And, to the point of the commenter, yeah, I like to tell my clients that when you get right down to it, the BSA is really what your examiner says it is. That, you can have all sorts of policy pronouncements coming out of Washington, but those aren't the people that are examining your bank, and they're not the people that you're going to have to deal with on a day-to-day basis. So,
right.
regardless of what they're saying in Washington, if it doesn't filter down to the examiner level, then it doesn't really matter all that much.
It's going
I
to
want
be
to shift.
interesting.
No, go
I
ahead,
was
Lee.
just going to add, it's going to be interesting though, as examiners look at different banks and different banks taking different approaches. Because, we are at this crossroads here where different banks are going to interpret the FAQs in different ways. And then the examiners have to take from that to get some of the clarity. So it'll be interesting to see how that plays out.
Yeah, and Lee, it would be nice, but probably not realistic if you could, like, if the industry could kind of hold hands on some of this stuff, because I think that the industry has an opportunity to create some new standards, right, and get the examiners familiar with them. But if one bank is doing one thing, another bank is doing another thing, then there really is no standard, and then you kind of leave the examiners to their own devices.
So I want to shift gears here. One of the other areas that I think is certainly influencing what's happening in the space around filing SARs is the expanding financial crime landscape. And so, as we know, since 2020, fraud has expanded significantly, both in the US and globally. And it's resulted in a flood of SARs. And so, going to start with Steve. How have you seen this impacting law enforcement efforts to intercept and prevent fraud? Is there more interaction between federal and local law enforcement, and are these SARs helping?
Yeah, no, the whole fraud explosion is, I don't know, and I always question this when I'm dealing with my teams and asking the investigators, is there more fraud, or is it our ability to detect fraud better that came out here? When I first started as a SAR review team, and I'll really date myself because one of the things I tell you, I give you a perspective of a SAR review team that started a lot of years ago and is now dealing with the newer, cyber enhanced financial world. We started out there in my area. There was a very separate, distinct fraud group where we would get together. In our area, it was called SAFI, but other places had different organizations that were similar to SAR teams, but they dealt just with fraud. But all of a sudden, when we changed to more cyber and online banking and everything, the fraud just got exposed to everything. Almost reverse things when the SAR team, we originally put this together, and I'll date myself circa the early 2000s. It seemed like the information flow was, the SAR group was primarily major federal agencies, and sometimes the information or intelligence would trickle down to the state and local officers in the mix, and you would pass that on. But now it seems like with fraud it's almost like the whole gist of it is mostly SAR is kind of more directed to state and local officers that are going to have to find their way up to some of the federal levels because of the fraud levels, because it's blatant and right there before you. So it's just a perspective that they have, and then all of a sudden you're introduced to a lot more people from law enforcement that were probably not as educated on the BSA and its worth that maybe they should have been. So it's just that kind of catch up, and like we're all catching up with technology now. So, the fraud is out there. The only thing I caution out there, and it's something I learned a long time ago, and I think there was one person who used to say, criminals are not agnostic. And there's another gentleman from our industry who used the term, it wasn't his, I guess it's called polycriminality. I think what we're finding out here is that none of these criminals are exclusive to anything, and the fraud is exposing, there's drug dealers that commit fraud. There's fraudsters that commit all kinds of, retail theft. There's the human trafficking side of the house. I think we try to focus on, very specific, crimes. But when it comes to money, I mean, very few of these criminals have like one focused, activity, and you're seeing that crossover. I saw it in our meeting on Monday or on Tuesday here, that the polycriminality, that one side is looking at it for a human trafficking side, the other side's looking at them for some CSAM material, and it's this whole like mix of stuff. But it just reiterates the whole purpose behind the BSA, that everything's about the money, and the BSA is great for following the money.
Lee, are you seeing again from the FI side, are you seeing this explosion of fraud and fraud-related SARs and more activity between both federal and local law enforcement? Is this impacting interactions from your side with law enforcement?
Yeah, I think it's a challenge because, as Steve mentioned, the fraud element, the audience is a little bit different than it is for some of the AML SARs. And so creating the relationships that you need to make and the inroads to build the interaction is a challenge on the fraud side. I think, during the COVID years, you had it a little bit different because you were talking to some of the same people, but now you're back to state and local law enforcement with a lot of the fraud interactions. And that's going to be a challenge for a major financial institution to really build the inroads there. And that's why it goes back, I think, to the SARs. That's our primary mode of communicating with federal and local law enforcement.
Yeah, one of the communications things in there, especially with the newer SARs, is introducing law enforcement. And I'm a I was a detective by trade and by heart, and it's still, I kind of live and breathe, see the world as a detective view. There's a kind of I call it a bifocal investigative approach to money anymore. There's the fraud investigation where I'm trying to recover, or my agents are trying to recover, grandma's stolen 401k through the fraudsters or whatever. But there's the other half of the picture, and same thing with money laundering. We're trying to recover the proceeds from fentanyl or cocaine trafficking out there. But there's the other side of the fraud or the other side of the BSA, which is available to agents and investigators now, is that personal stuff. I can dissect the personal life of the fraudster, and I can find some interesting things that helps me build a better case. I'm not necessarily trying to recover the lost fortune as much as I'm I can tell everywhere this person goes, what they interact with. I'm seeing other pieces that can become evidence. So it's getting investigators, okay, you're trying to recover stuff, you're trying to do that part of it, but you also can't forget that our lives are built with our finances. I mean, all these other companies like Amazon exploit us for that. And, it's law enforcement needs to kind of do the same now that information is available to them.
So we had a question come in about with all these changes, do we feel that FinCEN is adequately aligned with FATF? And I guess I'm going to take that one. First, I'm going to let you know that later in the year, in August, we're going to do one of our webinars on kind of the current state of FATF and its various recommendations and things. But I think the short answer to your question is we're going to find out in October, because the mutual evaluation is ongoing, of the United States is currently ongoing. And I believe that the evaluators will be on the ground next week, I think, is when they start. And the report of the mutual evaluation will be reported out at the October plenary. So I think that the U.S. is drifting, but we're going to get an official announcement pretty quickly here. So want to shift to something that Steve already alluded to, and that is the value of collaboration within organizations. So we talk a lot about public-private partnerships, which is really the collaboration between private sector and government, which mostly is in the face of regulators and law enforcement. But the other issue that I think is one that we have to talk about is really about the collaboration within organizations. And in my practice, I worked with a lot of small institutions, and collaboration was easy because the 5 people who dealt with all this stuff sat in the same room. So, there weren't any silos or anything like that. As institutions obviously have gotten larger and larger and more specialized, we find, hundreds of people working together just on fraud, maybe just on check fraud, or just on certain types of money laundering topologies. And so the question is, how do we really work to keep the natural tendency to work in silos from really degrading the quality of our compliance, but also make filing useful SARs more difficult? So Lee, I'll throw that one to you to start.
Yeah, I've spent a decade in AML at larger institutions, so my experience is a little different than you. I was at Capital One and now at PNC, and the silos are definitely one of the challenges, because you do have that hundreds of people. The good news is I think we're getting better at it, and I think we're getting better at it because technology is getting better at bringing massive amounts of data into one place. When I started at financial institutions, you didn't have the same investigators looking at the same lines of business. So the people who were looking at retail bank weren't looking at credit cards, and they weren't talking to each other. Now, because of technology, one investigator can often look at all of that activity in one and send that information over to law enforcement in a cohesive SAR rather than individual. So I think we're getting better at it, but it's still going to be a challenge because you still have the size. You still have to overcome that size impact.
And Dan, you in your practice, I know you and your colleagues see a wide variety of institutions, not just traditional banks, but also fintechs, new payment platforms, things like that. What are you seeing? What kind of
Yeah.
things do you see them trying to do to overcome this problem?
Well, I mean, it's first of all, it's a huge problem,
Yeah.
particularly in larger institutions. But I think the advent of banks partnering with fintechs just complicates it either even more, in terms of siloing. And these are issues that can be addressed. For example, through contract, like if a bank is going to, let's say they're doing banking as a service with a fintech partner. So it's really the fintech that's onboarding the customers, but they may be the bank's customers, say for purposes of the CIP rule or CDD rule. So the bank is forced to rely on the fintech, but the contract should have specific provisions in there that obligate the fintech to provide customer information to the bank, so that the bank has a window into what's actually going on. And some banks that have not had this, or haven't enforced those kinds of provisions, they found themselves in quite a bit of trouble. There have been lots of enforcement actions against banks with fintech partners, including the disaster with Evolve Bank and Synapse a couple of years ago. So yeah, I think it's something that has to be understood up front. And same thing, within the institution. I think the big divide is always between fraud and AML, related but not exactly the same. And there have to be avenues of communication. And criminal organizations are diverse. They do lots of different things. They do fraud, they launder money, maybe they do cyber hacks, whatever. But if you don't have that kind of communication within the institution and its partners, you're getting this narrow view of what's actually going on. And you may miss the big picture, and you may fail to identify suspicious transactions, or maybe you do, but you file SARs that are not really complete because you haven't absorbed everything that is known about the customer and how they're transacting. So again, it's a challenge, but I think if we're going to have any chance here of being effective against the threats that institutions face these days, there has to be robust information sharing.
Yeah, I kind of quote that old Beach Boys songs, "You don't know what I got." And then sometimes you don't know what you've got when you start talking about the different aspects of this, because it is the Bank Secrecy Act. And I've been at this so long, I take it for granted the confidentialities that come with financial stuff. You are dealing with a really, kind of a landmine of different personal things when you start dealing into personal financing, it down in the weeds here. So I quote my old director here before, used to say that everybody likes to share till it's their turn to share. And you've got to make those relationships. That's what I'm trying with we got the AMLPF coming up here, whatever, kind of establish those partnerships. Because like I think from a case level, I think of all the cases we've done and how they got there, and it comes down to some very personal relationships. I mean, the cases that get across the finish line, the prosecutions get there. There's close working relationships. There's no way not to. So it's kind of like you've got to. Those kind of partnerships that work well like that, have to be constantly, I don't know, fed or whatever you want in there. You've got to constantly stay with people so you have trusted sources. I mean, banks are not, to me, it's not Wells Fargo, PNC, or TD or whatever. It's a person over there. It's Jim over here. It's Mike over there. It's Les over there. And that starts that process. But a lot of times we really don't know what we have, and sometimes we're asking for stuff we don't know what we're asking for. And it's kind once everybody gets together, those partnerships can be so tremendous, because you can start thinking under the same wavelength. Hey, this is the intended purpose of this.
Steve, if I may, it was true in the government too. When I was in the government, because like we would often find, we being like bank regulators, that law enforcement was often reluctant to, share any information with us. Sometimes they could, right? It could be under grand jury secrecy or, classified information. But, to the extent that you can develop relationships with the right people, then you can have that robust information, even on sharing, even on the government side, and groups like the old, I don't know if you remember the old bank fraud working group, but that was so great because, I could remember, working on cases when I was at OCC, and, it's like you're trying, you're trying to work collaboratively with, say, a U.S. attorney's office, but you've had no dealings with them. But, through the bank fraud working group, say, oh, I'm going to call so-and-so. And a lot of times you could just break through all the clutter.
Yeah, it is. It is that sharing information, and it is kind of who do you go to or whatever. I just experienced this one here. There was one of the agents from the team had got a subpoena or subpoena for some information, and I pointed them in contact with the AML person, but then they kept working with the subpoena compliance and was very disappointed that they didn't get the information they wanted to. And I was like, did you go back to that person to make sure? Because you assume that then, which is terrible, you assume that subpoena compliance person is going to give you what you need, and really the person you need to talk to, is the person in AML saying, yeah, you don't need everything. The stuff you're really looking for is this, and this is how you get it.
Yeah, and sometimes you have to remind yourself that you all speak the same language, even though it doesn't always feel like you do. I think, Dan, you pointed to the divide between AML and fraud, and that's a big part of it. Everybody kind of feels like, no, this is a different avenue, and you don't understand what I do. And the more you can build those relationships and talk to each other, the more you can realize, no, we do. We're speaking the same language, just because coming at it from a different angle.
Yeah, my experience is that it is really a language issue. And they have different reasons. I mean, at its broadest, fraud teams are trying to, as Steve alluded to earlier, recover grandma's stolen money. And they know that if they don't move very quickly, they won't be able to. Historically, the anti-money laundering side has been a longer view, looking at a much bigger river of transactions. Until very recently, almost all the systems were, done in the transaction analysis was run in batches, at the end of a week or even at the end of a month. And so it was a very different kind of timeline, and that tended to put the teams, I don't want to say at odds, but they were, the fraud folks were like sprinters, and the AML teams were like long distance runners. And yeah, they're both runners, but they're, they don't train the same. They don't, all those kinds of things. I think technology is changing that, but and recognizing that, as we know now, the criminals are agnostic. Somebody already said that. You know, they're probably doing a fraud and figuring out how to launder the money from the fraud at the same time. So they're not going, well, we don't do money laundering. We only do fraud. I mean, they'll do whatever they need to do. So getting everybody together and getting them to understand, yeah, there's differences at the edges, but the common center, that's what we have to focus on, I think is really valuable. So, okay. We talked about internal silos and the value of collaboration. Now let's talk about, and we've already leaned into this a little bit, but let's talk a little bit about collaboration between the private sector and law enforcement. There's a lot of effort to create collaborative partnerships. I know that IRSCI has a program they've been running for about a year called CI First that has been quite successful in getting financial service providers and the IRS criminal investigation folks talking with each other to understand what do the banks have, what do the financial service folks have, and what do they know? And from CI's perspective, what do we really need for a good investigation and a good prosecution? So there's lots of efforts, and Steve, you already alluded to it, but I want to put in a plug. The AML Partnership Forum, which will have its 4th annual meeting in Washington on the 19th and 20th of March, is all about helping create and nurture these partnerships. And I know, Dan, you're actively involved, and Steve, you're actively involved. People can register for that at amlpf.com. So if you're interested in 2 days of meetings all about this issue, please consider joining. But as we work together, what is a
that
good
vein, I'll-
partnership? I'm sorry,
in
go
that
ahead.
vein, just me say to you, I just want to point in for the AML Partnership Forum coming up is where I think you probably should allude to is we're kind of proud this year that we've increased our law enforcement presence a lot more than before, which is probably a good thing for this.
Yeah. So we talk a lot about a partnership. I want to ask each of you, and I'll start with Dan. What does a good public-private partnership look like, or partnership law enforcement look like?
Yeah, well, some of it goes back to what Steve was saying earlier and what we were talking about it being about relationships, really. And, one of the things that I don't think I fully appreciated when I was in the government, but I do now, is just, how valuable the work that banks, FIUs do, right? Their financial intelligence unit. They have different names in banks, but they all essentially do the same thing, right? They're second line. They do case investigations of escalated alerts, and then that becomes the basis for SARs. And most of those FIUs are staffed with ex-law enforcement people, investigators. They know what they're doing. And the output of that is, in many cases, it's really tremendous, And I don't think honestly, I don't think banks get enough credit for it. I mean, it's like the failures get lots of attention, but the good stuff rarely does, right? It kind of goes unnoticed, But I mean, banks provide so much great information to law enforcement, and I think that's sort of the vehicle. I think for reaching out. You want to file good, well-supported, timely SARs. But you also don't want to wait. You get in situations where perhaps it's developing, it's ongoing. Pick up the phone, call so and so, and what happens in most cases is that there's a relationship of trust that's established, and then you've got an open line of communication. To me, those are the best partnerships, and I see that happen a lot, with banks that are our clients, and I'm sure it happens with other banks that aren't our clients. But those kinds of personal relationships are really, really important, and that gets really to the heart, I think, of being effective in this space. If you don't have that, if you're just filing paper but you're not communicating, you're not going to be that effective.
Steve mentioned that he's a detective at heart, and it made me laugh because I say all the time, I'm still an investigator at heart. And I think the investigators who are doing this work at financial institutions are trying to do good work. They're fulfilling their regulatory obligation, and they're protecting their organization that they work for, but they really want to provide good law enforcement, good information to law enforcement. They want to help. And I think what that does is hopefully build a level of trust with law enforcement, that they start to trust that, hey, these investigators are doing good work. And also they know which ones to escalate. They know which ones are the ones to pick up the phone and make a call about. And that builds that trust that you talked about that I think is so important.
Yeah, there's a lot in there too, and back and forth is kind of like we learn the nuances of each side of the house here. Obviously, the frauds brought, and I've seen this firsthand all the time, a lot of people into this area that have like very, very limited idea what the BSA and what was intended here. So it's important that one of my more senior people talking to somebody from the BSA of compliance, there's that natural trust and understanding is you may have that detective that just has that grandma's fraud case in some local thing that is, his understanding of SARs and this is minimal, that trust is built there. Hey, let me tell you, make sure this getting to the right way, and this is how you use the information. This is how I can help you, can't help you, because it does work both sides. And you said you're some great former LE people and the compliance people, and that's nice. One of the things I spend more time on my job is fielding calls. Hey, who do you know over here? Do you know anybody over at the casino? Do you know anybody at PNC? Who do you know? And sometimes it's the same people, but you realize that these relationships have to be nurtured all the time. And it really has to all the time. There was long before I was detective and pushing my patrol car around, there used to be a talk radio program on was non-political. It's a guy named Bruce Williams, and he was like a wise old grandfather. And he used to talk about the concept. I call it my Coke and Pepsi concept. He says everybody in the world knows what Coke and Pepsi is, but if they stop advertising for even a day, they lose sales. And we kind of understand that in our relationships. We got to kind of keep these fresh. That's why we do it with the SAR review team meetings, trying to get the things together and get these people with the like things like the AMLPF forum, these webinars where we start refreshing these relationships, because you never know when that case comes up and somebody needs that answer quick. And it happened just last week with somebody. Hey, I need to have somebody real fast, and they were able to take care of the problem.
Yeah, there's also, I mean, there's turnover, there's transition, so you could devote a lot of time establishing relationships, say with an FBI office or something, and people leave. They leave at the bank, they leave, the law enforcement agency, and then you kind of, so it's something I think you have to constantly work at and nurture. One aside too, it just kind of occurred to me as you were talking, but we're talking about all the good things that banks do, and they do those good things, but this kind of raises a BSA reform issue, because I often see situations where banks, discover some big money laundering scheme or fraud scheme that's being run through the institution, and they do the right thing. They shut it down, they file SARs, reach out to law enforcement. Sometimes law enforcement, even commends them for their good work, and then they get a cease and desist order and a civil money penalty from their regulator. And it just makes me think that the regulators are not really focusing on the right things. And I know why they get the civil money penalties, because, it was problems with their, customer identification or problems with their customer due diligence, perhaps that, opened the door to that scheme. But it's almost like the regulators don't even pay attention to the information that's being provided to law enforcement. And, to me, that's the most important thing, but it's not really recognized.
It is the why.
Right.
Yeah. So I want to shift gears again. We've mentioned a number of times, changes in technology. So I'll start with Lee. What's the impact in this space around SARs of technology? And also kind of coupled with that, the other thing that's been very prominent, I would say, in the last 6 to 12 months is job anxiety in the context of AI's coming.
Yeah.
So
Yeah, I think you could spend a whole hour on this one, right?
I'm sure we could.
and you probably will at some point.
That's true.
You probably will. Look, it's tough because we're really early. We're in these early stages of what is AI going to do? What are banks going to allow it to do? How are they going to trust it? And I think when you talk about AI anxiety around jobs, you talk about that in the framework of these FAQs and what they might mean about what banks feel like they're required to do going forward, and then adding technology onto that layer. I think it's a challenge. It's a real challenge for people leaders at financial institutions right now to talk to their teams on a regular basis. But I think what you keep coming back to is learn as much as you can about AI, be a resource, be part of the solution, and understand that all technology improvements have still at some point required human intervention and human interaction, and that's not going away yet. So just keep pushing, keep pushing that, and then I think for right now it's still a little bit of a waiting game to see where this goes.
And are you? And I'm not asking for the secret sauce, but is your organization looking to deploy, whether it's AI or other newer technologies, to your SAR process?
I think everybody's looking to see what part of the SAR process they can automate or they can incorporate AI. I don't know that there have been final answers to that yet, so much as what are the things that AI can be taught to do that we are doing manually in a manual manner right now.
And I know
go ahead, Steve.
work as a SAR team over here, I was pleasantly surprised to, field a couple emails later from FinCEN, who's kind of like, hey, can we start experimenting with what AI is going to mean to teams like that? And I'm like, would you guys willing to help? And like, yeah, of course we are. I'm as interested as anybody else. So at least we know those folks are trying to stay on top of it. I was very pleased to see that the other day that, hey, yeah, we want, we're not going to fall behind here. We're going to see what that does for what it means to your team and how we do it.
And the early implications are nice. They're how can we make a SAR better, right? How can we get more information? How can we make a SAR better? Those are great. I think we all want to get better at this. It's just future state is still a little unknown.
Yeah. So another thing that technology is maybe helping with is coping with the gap that we sometimes hear referred to as the speed of crime versus the speed of SAR. So Steve, what are you seeing either in what's coming to you or things like the FinCEN, I'm going to be a little, FinCEN pilot. I'm not sure it's that far along yet, but the concept of, hey, we need to figure out how to close that gap. Often, maybe not always described that way, but really part of what we're saying is we know that the bad guys are definitely deploying the newest tools, and they're probably they appear to be constantly trying to figure out how to deploy them better and faster. So we're always playing catch up. But what do you see in that space?
Obviously, you're correct with the idea. There is a speed of crime now. I mean, you have the fraud issue, especially the pig butchering and some of the other stuff. You've got stuff you're trying to recover money before it gets too far between cryptos and things like that in there. It moves a little faster. I guess the number one thing, and I see this because I do a lot of law enforcement training and stuff, is keeping up to date from that side because you're dealing with a whole new realm of evidence, and even the prosecutors are trying to get a handle on is, how do you translate all this fintech into, wait a minute, I got to bring witnesses in the courtroom if I'm going to make a case or whatever. And there's a lot of new areas that, there is no template for this. It hasn't existed before. We're living in a new era where some areas we're going to play catch up with. At least I think now with AI, you seem to be a lot more people saying, no, we don't want to get this too far ahead of us. Let's jump into this early and make sure we're kind of dotting I's and crossing T's before it becomes overwhelming. And, you see that with the some of the crypto markets out there now and some of the wonderful people there. Hopefully, I don't know if we'll stay ahead of it, but maybe we can keep up with it.
Yeah, you raised an interesting issue, which is for a whole different organization and separate event, but the whole question of how courts will view evidence generated by AI tools and things like that. It's been a long time since I was in law school, but the rules of evidence are built slowly, and when new things happen, they're not instantly accepted, nor should they be. So we'll see how long it takes for that groundwork to be laid and generally accepted.
Yeah, we also have to remind ourselves in our partnerships, we're talking about the FIs and us partnerships, but there's still some other partnerships we need to be involved in here, especially is because the finances aren't always standalone, especially with technology day and age. Your whole cell phone, social media side of the house, the open source and whatever, which kind of plays in here, is all a piece of this puzzle and something that law enforcement has to deal with because you're getting, and I'm working with some people that are experts with the open source and some of the techs and especially some of these like, your spam schemes on your phone or whatever. There's all kinds of the new schemes that are coming out there all the time, and realizing that, yeah, we have the financial institution information. We also have a lot of like text messaging and social media information that's passing on and forth here. So there's a lot to understand. I think people are trying to stay ahead of it, but it's a changing world.
Dan, I want to come back to you, and it actually touches on the question I'm going to ask you touches on something that you touched on very briefly at the very beginning, and that is what are the possible long-term impacts of the current regulatory rollback? And I guess I'd ask you to think about it from two sides. One is, what's the risk to institutions because of a change, the pendulum swing. But also, what's the risk to the, not to be too grandiose, but the financial system from some of the rollbacks that we're seeing?
Yeah, so I think we're at a fork in the road. We talked a little bit about BSA reform. We probably have a better shot at BSA reform right now than we've ever had, but I do have some concerns about what has happened and what is likely to happen. The reason I do think BSA reform is important, and that includes, reducing unnecessary regulatory burden, is that, number one, I mean, the costs of BSA compliance are exorbitant, right? It's just a killer for financial institutions. So there's that. But I look at the other side of it too, and particularly with some of the things that Lee and Steve have been talking about in terms of the overall threat environment right now. That's all technology fueled. I mean, it's really, really off the charts. So we're looking at, the current BSA framework, which is kind of rooted in 20th century technology and 20th century approaches, and it really makes me wonder whether it's up to the task. So I'm a proponent of BSA reform, but BSA reform does not equal BSA laxity, and that's what I worry about. And I think financial institutions have to be worried about it, but I look at like what's going on at the OCC, right? My former agency, where with all due respect, they are giving out national trust charters, essentially bank charters, to financial technology companies and crypto exchanges like it's candy on Halloween, right? I mean, I don't know how many of them they've approved, about 15 so far. It's like practically every day, you get a new approval. And that's okay. It's bringing those entities into the mainstream financial system, but it's also introducing some new risks. And if you're going to introduce new risks, you really have to regulate it closely. You have to supervise it closely. And that's where I worry, both because of some of the things that the banking agencies are doing in terms of like rolling back their exam procedures and, kind of, losing staff. I mean, my goodness, they've lost so many people like throughout the government, but certainly in the banking agencies. OCC's lost a ton of staff, and it's not just numbers; it's people with institutional knowledge and expertise that they've lost. So they're introducing new risks at the same time that they've lost all these people, and they're rolling back, supervision and regulation. So to me, that's a very, very risky proposition, and I worry about what groundwork is being laid down the road. Is this going to create some sort of a catastrophe? For financial institutions, to be very granular, I think one of the biggest challenges right now is resisting efforts to decimate your AML team. I think that they're all reading the headlines and they look at how much they're spending on BSA compliance, and the very natural inclination is going to be, we don't have to do this anymore. Why are we spending all this money on AML? I mean, the government's basically telling us this isn't a priority. And I think that if you fall into that trap, it may give you some cost savings, significant cost savings in the short run, but pendulum swing in both directions. And we could be in a very different situation in a few years. And I really think it'd be unfortunate if institutions, use this as a time to cut back, and then 2 or 3 years from now, we're seeing civil money penalties in the hundreds of millions of dollars because banks dropped the ball on AML. So I try to be half glass full, but honestly, I have pretty deep concerns about some of the things that are happening right now.
I agree with you 100%, particularly on the oversight side. Um, these are new risks. I would admit, even though I follow this stuff very closely, I don't think I can articulate all of the risks that we're taking on, particularly as you alluded to with the trust charters. I helped a number of clients over the years get those trust charters, and it was a very deliberative, long term. It took a long time to get one of those charters, and these were folks that had been in the
Yeah.
financial services business for a long time, and they, in some cases had been in the trust business for a long time, and they wanted to just shift the vehicle, but that didn't speed things up. And now not only have a number been granted, but it feels like the time from application to approval is very short
Really?
compared to what it traditionally has been. And I'm not saying that the old way is the best way, but
Right.
it feels like some balance between is probably better. So we've come to the end of our time. First, I want to thank Lee and Steve and Dan for your thoughtful insights and the practical guidance you've given the audience. I want to thank everybody who joined us today and stayed with us to the end. We hope you found the discussion valuable and thought-provoking. If you'd like to revisit today's session or share it with your team, the recording will be available soon on our AML Voices webpage at amlrightsource.com in the resource section. In March, we are going to be discussing AMLA, the future of compliance in the EU. And even if you're not in the EU, I think it's worth tuning into because there's a lot going on there that I think gives some valuable lessons for those of us in the US, even with this apparent rollback, at least at the moment. That session's going to be live streamed on March 26th at 11 a.m. Eastern Time, so a little earlier than normal, but that's to accommodate our audience in the EU. And you can register for the March webinar and check out our other resources at amlrightsource.com. So on behalf of all of us at AML RightSource, thanks again for joining us. Stay safe, stay compliant, and we'll see you next time on AML Voices.